Money Saving Minute number 044. 5 Factors of Credit Scoring. Most people don't really know where that magic credit score number comes from. The general assumption is, if I pay my bills on time, then I'll have perfect credit. The reality, however, is that paying bills on time will produce a good credit score, but not a perfect credit score. The positive and negative information in your credit report is grouped into 5 categories. Each category is weighed differently and is calculated into a percentage. These percentages are based on the importance of the 5 categories for the general population. Please note, however, that every individual situation is weighed slightly differently. In other words, this is the guideline, not the rule. Also to note, credit is needed in order to have a credit score. The misnomer that paying cash for purchases will equal great credit is false. Cash is king, but it doesn't buy 800 credit scores. Payment history is the most heavily weighed factor in credit scoring. A few late payments can have a large impact on your scores and can stick with you up to 7 years. The number of trade lines that you have in good standings will determine how quickly that you will earn these points back. Owing money on credit accounts doesn't necessarily mean that you're a high-risk borrower. However, when a revolving account is reported as close to the account limit, this raises the risk level for a lender and therefore lowers your credit scores. Note that even if you pay off your credit cards in full each month, your credit report will show the balance on those accounts equal to the purchases made that month. If you charge close to your maximum credit line each month, consider requesting a credit line increase so that your usage ratio stays under 50%. Your FICO score takes into account how long your credit accounts have been established. This includes the age of your oldest account, the age of your newest account, and the average of all your accounts. This is why short-term loans do not help to reestablish credit. A high-interest, short-term loan from a store might get you a new TV, but it's not going to get you the 800 credit scores. Reestablishing credit takes time and the proper tools. Scoring will consider your mix of credit cards, retail accounts, installment loans, finance company accounts, utilities, and mortgages. Diversity shows financial responsibility. Opening several credit accounts in a short period of time represents a greater risk, especially for people that don't have a long credit history. Also, reaching the maximum level on any new account as soon as you open the account may have a negative impact. If you are planning on taking out a line of credit for a specific purchase, such as, say, a new washer or dryer, request a limit that is higher than your purchase. Even if you are planning on paying off the purchase within a short period of time, the account will always show that the limit and the historic high were the same. This Money Saving Minute has been brought to you by Team Warzone. Choosing the right loan starts with choosing the right loan officers. Kip Warzone and Dan Dowlin are your full-service Wisconsin loan officers offering more loan products than your average bank. For all of your home loan needs and questions, please contact Team Warzone.